inflation's grinding somewhat higher. It's not a reason to panic, though. And it's important to recognise a change in the oil price isn't inflation. Inflation is about a general rise in prices, lots of prices rising. Lots of prices are rising. That's telling you something about the economy. That's telling you the Fed's got to act. If one price is rising, that's telling you something about a specific product. It's not telling you about the economy at large. So I don't think the Fed's going to panic over a rise higher in the oil price. Only if that starts feeding through into wages is the Fed going to get worked up about it.
But are all prices rising? Because we do have more than just the oil story, and we know it feeds into a number of different areas of the economy. But in the background too, potential for price rises around trade tariffs if they move forward with the story against possibly some negotiations in the backdrop. The wages component, where you've got more demand coming through because people are gainfully employed. So are costs rising across the economy?
Well, as I said, we're getting a gradual rise. But I mean, the trade protection, the taxes that we've seen on aluminium, say, what does this mean in reality? It means if you're buying a six-pack of Budweiser, for example, which is roughly $9.50, with the aluminium tax, it will be $9.53. Now, even with Steve's consumption rate of beer, that's not going to be a huge impact on the household budget, an extra 3 cents on a six-pack of beer.
On a Friday night.
To be fair, I get it in bottles from a craft place.
Yeah, of course you do. Of course you do. So the country living.
A shout out to Harvey's there. There you go. It's not a listed company.
So, yeah, I don't think we're going to have an overwhelming problem. Inflation's basically normal. It's been normal for a while, frankly. We're getting rid of some of the nonsense around things like Verizon. We're going to probably get some upward pressure from things like owner's equivalent rent, which is another made-up price. Essentially, though, this is not going to cause the Fed to run screaming in the direction of we need to start hiking in 50 basis point increments or anything like that. It's going to be a steady quarter point to quarter pace.
So is it an overreaction then? Because investors are running screaming in one direction, that's straight towards a 3% threshold, possibly.
Well, my feeling on this is bond dealers are simple people. They like simple round numbers, and they're going for 3% because it's there. I mean, economically, does it matter? No, it doesn't. Is there any difference between 3% and 2.98? No, there is not. Is there any difference between 3 and 2.7? No, not really. Economically, this is just noise in the background. So I don't think we're going to have a huge issue here.
You mentioned the word panic about Fed as well. I think it was right to kind of think about that because everyone talks in these big headlines, especially you economists. But actually, it's good, isn't it? If they do get the wage inflation coming through, you said they're not going to panic unless it starts going through into wage inflation. We want it to go through into wage inflation, isn't it? It's how capitalism saves itself.
Well, we're getting some wage inflation. What we want is wage inflation which is offset by productivity gains. What we want is the labour cost, the unit labour cost. This is what economists get excited about. That shouldn't be rising too much. We don't want 4%, 5% inflation. Having inflation hovering around somewhere between 2 and 3%, that's perfectly acceptable. That's broadly what we've got on most measures, and that's what the Fed's trying to get at this stage. We are seeing fairly decent wage inflation. If you look at the proper numbers, if you look at the Atlanta Fed survey, the Atlanta Fed's just revised their wage numbers to take account of some structural shifts in the labour market. You're getting a fairly decent sort of 3.5% wage increase coming through in the States at the moment. That's not bad.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.